Good afternoon, everyone, and thank you for joining us. My name is Alexis Bortnicker, and I'm a partner in the healthcare group of Foley and Lardner. I'm joined today by my colleagues, Lauren Carboni and Anil Shankar. We appreciate you spending a few minutes with us. We know that there's a lot going on in the healthcare world. We're here today to discuss the Provider Relief Fund, what has transpired to date with respect to the fund and the distribution of funds, and what's coming in the pipeline. In the midst of the COVID-19 crisis, the Department of Health and Human Services has rushed to provide financial assistance to healthcare providers across the country. However, the guidance is changing daily, and the receipt of funds has raised innumerable questions for providers. Providers are trying to understand the risks associated with the money they've received and finding ways to ensure that the funds are spent in a compliant way. This is challenging at a time when little guidance has been issued and we have little to no precedents to lean on. Although the money being distributed is much needed, it is raising significant anxiety providers. We will not be able to answer every question today. There are a number of questions which are still to be answered, but we hope to provide some background, some context, and some pointers for wading through the process. We're going to spend some time walking through, the sources of funds, the uses for the funds, questions about reporting, a number of other things. We'll also leave some time for Q&A. We find that it's good to understand where other people stand and what other people are struggling through, and hopefully we can provide some guidance as we walk through. So with that brief introduction, I'm going to get us kicked off since we only have 30 minutes, and I'm going to turn this over. If you have any questions along the way, please feel free to put them into the question and answer box, and we will either answer them as we go or address them at the end. So with that, I'm going to kick this over to my colleague, Lauren Carboni, who's going to set the stage for us. Lauren?
Thanks, Alexis. Before we get into sort of the nitty-gritty and the details about what the funding provides and the requirements, I just wanted to provide a summary of the available funding to date for providers. Let me switch my slide. So as everyone's likely aware, the CARES Act, the first version of the CARES Act passed on March 27th. And among other many allocations of funding, there is a specific allocation for $100 billion for healthcare providers. To date, there has been an additional $75 billion, which came out on Friday when Congress and the President signed into law the CARES Act 3.5. So as of right now, there's $175 billion that is available to be distributed by the Department of Health and Human Services to the healthcare industry. These funds are separate from some of the other buckets of money. As you can see on the slide, there's some of them mentioned here. And it's worth noting that Secretary Azar and the HHS do have broad discretion over how the money is distributed. And to date, they have delineated two large buckets for distributing such funds. One are the general allocations, and two are target allocations, which we'll talk about later in our presentation today. It's also worth noting that per HHS, there's no requirement to repay any funding that is received under this $175 billion bucket of allocations. The payments are grants and not loans. That being said, there are certain requirements that need to be complied with as conditions of payment, which again, we'll get into later in more detail in our presentation today. So I first want to talk about the general allocations. So under the general allocations, there's $50 billion total. The first tranche of $30 billion was distributed back in April 10th. Payments were deposited directly to providers via direct deposit. Those payments were based on 2019 Medicare fee-for-service revenue. And let me go back and just clarify. These payments were to eligible healthcare providers, which an eligible healthcare provider means public entities, Medicare or Medicaid enrolled suppliers and providers, and other for-profit and nonprofit entities, as the Secretary of HHS may specify, who provide diagnoses, testing, or care for individuals with actual or suspected cases of COVID-19. The second tranche of the general allocations began being distributed on April 24th, so last Friday, and these payments are based on providers' 2018 total net patient revenue. HHS has stated that the change in methodology for these payments was to make up for those providers who received minimal payments under the first tranche because they don't have a high Medicare fee-for-service revenue, such as pediatricians. As I mentioned, these funds were directly provided to the providers with no application. And they are contingent upon certain terms and conditions, which are published on HHS's website, and we'll discuss the details of those terms and conditions today, as many of them have left some room for questions or concerns from providers. The next large bucket of funding that is made available through the CARES Act is targeted allocations. To date, HHS has announced 4 specific targeted allocations. However, it's likely that, well, they have hinted at that there will be additional targeted allocations in the future, but they've not provided any further guidance on what those may be. But we wanted to highlight the 4 that are known as of today. So the first is the treatment of the uninsured program. Under this, providers can obtain claims reimbursement for providing treatment to uninsured COVID patients. It's typically reimbursed at the Medicare rate. And the February 1st deadline was determined because that's the date in which the Centers for Medicare and Medicaid Services created COVID-19 specific codes. The next bucket is the $10 billion allocation for areas of greatest COVID impact. This will be determined by data that's received from hospitals, which we'll discuss that specific data later in our presentation. But HHS announced last week that there was an extension to providing such data, which actually passed on Saturday, April 25th. Providers who wanted a piece of this specific targeted allocation needed to apply and provide that data. Again, we'll talk about that later. Distributions are supposed to occur this week under the high impact COVID allocation, and it's likely limited to hospitals. And I say likely limited to hospitals because everything that we have seen thus far on HHS's website, including their guidance, has indicated that it is hospitals. However, on a call last week with HHS, they indicated that it is available to other healthcare providers. We don't think this is correct, but I just wanted to flag it just in the event something comes out from HHS that suggests it is extended to other healthcare providers besides hospitals. And the last 2 buckets of target allocations reserve $10 billion for rural providers and $400 million for providers of Indian health services. These payments are based upon operating expenses, and the HHS anticipates that disbursements for these 2 targeted allocations will also likely be distributed this week, or beginning this week. So in addition to the buckets that I've highlighted right now, we do anticipate additional distributions. For instance, under the targeted and general distributions that have already been announced, specifically for the first $100 billion under the CARES Act, there is still money that hasn't been allocated. Like, for instance, for the treatment of the uninsured program, HHS has not formally announced how much of that money they're going to use. And we don't anticipate they're going to use, I believe it's $30 billion remaining of that $100 billion. In addition, during HHS's announcement last week of the targeted allocations and the additional $20 billion in general allocations, they hinted that they are going to have additional target allocations coming up in the next couple of months including potentially targeted allocations for skilled nursing facilities, as those have been suffering particular costs due to COVID-19, as well as dentists and other providers who solely take Medicaid. So our Foley team is following this closely, and we'll be sure to keep everyone apprised as new announcements come out from HHS with respect to allocations. And I also just want to highlight that the CARES Act 3.5 that came out last week is interim relief meant to augment the initial CARES Act $100 billion funding that became available. And so it has the same requirements, and its purpose is to, just provide additional funding. Congress is working on what's going to be dubbed CARES Act 4.0 that will provide additional relief as well as potentially more long-term relief as well. However, it's unlikely that anything will be passed by Congress until, I would say, mid to late May, and that may even be generous. So that's sort of the lay of the land, and I'm going to hand it over to my colleague Anil Shankar to discuss the specifics of the terms and conditions for the funding.
Yeah, hi everybody. Thanks, Lauren. So we're going to dive in a bit to some of the key terms and conditions that have been imposed on receipt and retention and use of the funds. As Lauren just went over, there's a lot of different buckets of funds. We're focusing primarily on the general distribution. That's the $30 billion that has already been distributed, and then the additional $20 billion that is in the process of being distributed. Some entities have already gotten their share of that $20 billion as well as the initial $30 billion, and some are still waiting. We're focusing on those two buckets because they're the ones where we have the most information. As Alexis pointed out at the beginning of the call, everything here is a bit of a moving target. If you are a compliance officer or a finance person or anything else who's tracking these funds, I would recommend that you or someone in your organization be checking the HHS website every day because new stuff just gets posted there without much of an announcement. We have a link to the website at the end of the presentation. For example, they issued some FAQs over the weekend. This morning, they issued some terms and conditions for submitting claims for the uninsured. And then at one point in the past, a few days after they initially posted the terms and conditions, they made some relatively minor modifications to those terms and conditions. Just as a lawyer, it makes everybody nervous when they're changing the T&Cs that you're supposed to certify. So you want to keep checking those to make sure you have the latest. But with that said, we're going to focus on the general distribution terms and conditions. Certification is required within 30 days of receipt of the funds. The first funds were issued on April 10th, so that gives everybody a deadline in early May, but it could be a little bit later depending on when you receive them. We do expect similar conditions or requirements to certify on the additional $20 billion. The terms and conditions for those funds are almost identical. Failure to return the funds is going to result in you being deemed to have accepted them. And just recently, HHS has started saying that if you don't affirmatively attest to the certification that you accepted the funds, you may not be able to get additional distributions in the future. So there's a pretty big stick, or maybe it's a carrot, incentivizing folks to agree to those terms and conditions. That said, the False Claims Act does apply. These are federal funds, and you want to make sure you run through all the appropriate steps before you submit the certification. Make sure you review it carefully and can comply. I'd recommend talking with counsel on how terms and conditions apply to your individual circumstances. As Alexa said, we can't get into every individual question on this call, but we've seen hundreds of them in different varieties, and we're only going to be talking about the ones that kind of are the most common or the most frequently asked. And then the other piece of advice is that I would take some steps to document your internal conversations or your struggles interpreting the terms and conditions, maybe along the lines of the stuff we'll be talking about on this webinar. That can be helpful. There is some case law recognizing that having documentation that you were doing the best you could to interpret and fairly apply the terms and conditions when you made your certification can help reduce future risk in the event of an adverse audit or maybe even a whistleblower. All right, so one of the main questions that everyone's asking about is, who can receive the funds? And in a minute, we'll get to what can those people do with the funds. Lauren went over the basic eligibility criteria listed. It's also here in your slide. You have to have billed Medicare in 2019. The second requirement is you must provide or have provided diagnosis, testing, or care for individuals with possible or actual cases of COVID-19 after January 31, 2020. And what's interesting about that requirement is that HHS has said now in several different places on their webpage that they believe everyone who you provide diagnosis, testing, or care to is a possible or actual case of COVID-19. Basically, their view is that every patient that you treat could have the disease, and that's good enough to satisfy this test. It does not say that in the terms and conditions, but they've said it multiple times now on their website. Which isn't exactly as binding or as doesn't give quite the same assurance that they said in the terms and conditions, but it does provide some measure of confidence that you wouldn't be disagreeing with HHS if you certified under those circumstances. And then in addition, to receive the funds, you can't be excluded or terminated or kicked out of Medicare or the federal healthcare programs. So that we've received a number of questions about these eligibility criteria. Not limited just to who is a possible case, but a lot of complicated issues come up about providers who were recently terminated but maybe got the funds anyway, changes of ownership. You have a change of ownership that was effective, say, January 1, 2020, or even after that, then the money is likely going to go to whoever Medicare has on file as the billing entity for that, for the now sold provider. And that just raises a bunch of questions about how you're going to work together with a new provider to complete the attestations and make sure the money goes for the uses that HHS would like it to go for. Also, if you're a new provider who just started, or maybe you splintered off and created a new tax ID, you will not be getting these funds because you didn't bill in 2019, which can create some hardship. The other main bucket of questions I've been hearing, or one of the other main buckets, is what can the fund be used for? The actual language of the terms and conditions is on the screen here. The recipient, that means the recipient of the funds, is the tax ID that the money got sent to, must certify that the payment will only be used to prevent, prepare for, and respond to coronavirus, and that the payment shall reimburse the recipient only for healthcare-related expenses or lost revenues that are attributable to the coronavirus. So this language is notable in particular for its breadth. In particular, the mention of lost revenues is something that comes directly out of the appropriations that Congress put into the CARES Act governing these funds. And the inclusion of lost revenues is what makes these funds sort of special. It distinguishes them from other payers. Many of your organizations are probably looking to other sources like maybe some CDC grants. Maybe you're working with your Medicaid program to try and get coverage of some new additional things that you didn't previously provide, or maybe you're applying for funds from FEMA, but generally those other sources would not recognize lost revenues as an opportunity as an allowable cost under the grant. So that makes these funds sort of unique and very helpful for those providers that are facing huge reductions in their ability to serve their clients and get paid for it during the last few months. So the two main categories, we've broken it out. You can either claim lost revenue or these healthcare expenses. That just follows from the language that I just went over. The simplest thing to do is probably to use lost revenue because these funds were distributed. The formula worked out to about 6.2% of your Medicare fee-for-service volume for at least the first round of the distribution, and many providers have losses that exceed that. They've announced recently over the weekend these FAQs that came out. They seem pretty flexible about how you can document your lost revenue. They suggest you may use either a comparison of year-over-year revenue or else compare your budgeted revenue to actual revenue, and that HHS would view either approach as reasonable. But there is a caution I would provide, is that if you are going to be documenting your lost revenue, I think a pretty strong legal position to take is that once you've documented those as an allowable cost that you receive $10 million of grant funds, but you have $20 million of lost revenue. Once you've documented that your $20 million exceeds the $10 million, arguably you've claimed your entire grant, and no further conditions on those funds should really apply, to the same extent as if you had spent $20 million on, building a new ICU for COVID patients. But I would caution, and I have been cautioning many clients, that it's not that clear, and that it's not clear how auditors will view the requirement to account for lost revenue. And one way they could respond to this is by saying that, sure, you had lost revenue, but you also certified that all of your revenue is going to be used to prepare, prevent, and fight the coronavirus. And they may still view those funds, even if you've matched them with lost revenue, as something that you need to document exactly which costs you're using the revenue for. There is some reporting requirements that Alexis will go over in a few minutes. And that's the complexity I see with lost revenue, that even though it's probably the simplest method, you may not be done once you've done it. You may still have to account for how you're using that revenue that replaced your lost revenue. And if that's the case, or if you don't have enough lost revenue, or you choose not to use it, you'll have to identify healthcare expenses attributable to COVID-19. You'll have to identify specific activities and document their costs. There are a number of questions about what it means to be attributable to COVID-19. Again, the most flexible reading is that everything you're doing to keep your business open during this time period is arguably a healthcare-related expense attributable to COVID-19. I think there's at least a very reasonable case that if you're having to pay for salary for people and you have no revenue coming in, then that isn't attributable to the loss created by COVID-19. But it's not that clear. It is possible they could require a more granular connection to the virus. The other thing I'm going to call out is that there is a limit on payments of salary. They're greater than $197,000. This is an executive level salary that they mentioned. So if you're using the funds to pay your executives or your doctors who make more than that, those also may not be claimable. And just moving through this quickly because time's going by fast. There is a laundry list of things that you are not allowed to bill for. You can't use it for lobbying, for abortion expenditures, et cetera. So you should consult the terms and conditions carefully. And then the one that may trip some folks up is that you may not use it to reimburse expenses or losses that have been reimbursed from other sources, or that other sources are obligated to reimburse. So you need to work carefully with your finance team to line up the COVID costs that you have against other payer sources, including FEMA, to make sure you're not double dipping. And in addition, you may want to, if you have contractual obligations, if you have a guarantee from somebody or some other entity is covering your losses, that's something you need to look at carefully as well, to make sure that some other party is not obligated to pay you for either your lost revenue or anything else you might be trying to claim under this grant. And then lastly, providers who are reimbursed on the basis of cost may have some additional challenges, particularly if the new costs they're incurring for COVID end up rolling up to like a Medicaid cost report, for example. You may need to work with your state or other parties to distinguish those claims so you're not in violation of the double claiming. So with that, I'm going to turn it over to Alexis.
Thanks, Anil. I'm just going to take a second for administrative stuff, and then I'll keep going. We realize that we are closing in on the end of the time. I'd like folks to know we will stay on for a few extra minutes to answer any questions that we don't get to cover while we're here, or answer some questions at least. We'll also circulate a recording of this webinar to anybody who is listening in case you have to drop off and want to catch the end of it later. So you should expect to see that in your email. And we'll include the slides at that point. If anybody doesn't receive the slides in an email a few hours after the end of the webinar, I will put up on the screen a slide with our contact information. Please feel to email either Anil, Lauren, or I, and we will make sure you get a copy of the slides. So with that, I'll take us on. We have a few more points to address, and then a presentation, and then we'll open up for questions. As of, I believe, Friday, the portal is open for the application for the additional $20 billion from the General Relief Fund. Unlike the first $30 billion that were just distributed based on 2019 payments, for this portion, you have to A, have submitted your attestation, and B, you'll have to submit additional information, including prior tax returns, estimations of lost revenue, a listing of all the TINs that need to be included. There's an FAQ for the instructions, which is the first we've seen, which provides some helpful information. And just so that everybody knows, we've been told that applications will be processed in batches every Wednesday at 12 noon Eastern, but that the funds will not be distributed on a first come, first served basis. So if you don't have everything ready to go by this Wednesday, DHHS is suggesting that it won't penalize you. So it would be better to sort of collect all of your information, get all the information submitted versus submitting it incompletely. Also, one of the quick questions that we've seen a lot of before the FAQ is how do you determine lost revenue? The DHHS has given a good amount of flexibility. They're asking that you use a reasonable method of estimating the revenue during March and April, specifically compared to the same period last year. So, whether that's based on your, actual expenses versus budget expenses or, actual numbers from last year versus this year, I think there is some flexibility on how that's determined as long as it's reasonable. And again, I also wanted to point out, which was mentioned, is that the registration for the ability to bill for COVID treatment of uninsured patients is also open. It carries its own terms and conditions. It's a separate registration portal, all through the same provider relief website, but that is also open to receive additional funds for provision of care to the uninsured. So I think Anil noted that the questions we've received most relate to how we can use the funds. We've also seen a lot of concern about how to document the use of the funds. The terms and conditions require that all recipients submit documents sufficient to ensure that the funds were used for healthcare-related expenses or lost revenue attributable to coronavirus. As Anil said, we've received a lot of, if your revenue is significantly more than the payments, is just showing that you, have lost revenue above that number sufficient. We've been counseling that you should probably keep better records than that. And we know that entities who receive more than $150,000 in relief funds from any other L sources will need to submit a report to DHHS 10 days after the end of the quarter, so July 10th, which account for the total amount of funds received from HHS, how the funds were spent, a list of all projects or activities which covered, which the funds were used. We think the reporting is going to be at the TIN level. As to date, everything else has been at the TIN level, the TIN who submitted the bills in 2018, 2019, who received the payments, and not at sort of a large organizational level. We highly suggest that your compliance folks and your finance folks work together in this time to really make sure that you're accounting for expenses. And again, if you're relying on the loss of revenue, we still think it's a good idea to keep track of some places where that money would have gone, whether it's to pay rent, to keep the lights on, to pay staff salaries. Be mindful of the fact that you can't use the provider relief funds to pay for things that have been reimbursed elsewhere. So for example, if you got a PPP loan, you shouldn't be using the provider relief funds to cover salaries, because the PPP loan would have covered, or may have covered salaries. So I guess the moral of the story is that we don't have detail yet on what exactly the reports are going to look like, but we do think that you should coming up with a system for accounting. The more detail, the better. And again, just at least a good faith effort to show that you're tracking these funds and know where they're going and that they meet the buckets that they're supposed to meet. One of the biggest questions that we've gotten is, can providers reallocate funds? So for example, large hospital system attribute it to underlying physicians, physician groups who have physicians who have left, who have sort of have to move the money between divisions. unfortunately, what I would say is that the question is yes and no. The funds are being received at the entity level that's billing, and that entity can use the funds as it needs to, as long as it meets the requirements. It's not required to allocate it. Say if I'm a provider group and I had 10 providers, 10% to each provider. That said, if funds are being attributed to providers who are no longer there, then it may be necessary. The ability to reallocate those funds to the new provider or the successor. So, for example, the classic example is the sale of a practice to a larger provider group, and that the old practice received the funds, the legacy practice. But the legacy practice hasn't seen a patient, in 6 months because they're now part of a larger group. We haven't seen any mechanism that would allow the funds to be sort of passed through to the larger group so that the attestation could be done at the larger provider level. So we've raised this question in a number of ways. We're hoping this is what probably the number one question we've received consistently for a number of reasons. Every type of provider group seems to have these problems. We haven't seen anything yet, but to date, there's nothing that indicates that another entity can attest on your behalf. So ultimately, the entity that has to make the attestation is the entity of the TIN that received the funds, and there's no guidance that suggests that you can sort of pass on the funds and move the attestation requirements. So it's a risk area without additional guidance. I wanted to talk very quickly, I know we're at time, about balance billing. The DHHS has been very open about the fact that you can't, if you're going to take the funds, you can't balance bill patients. The terms and conditions specifically state that for all care for a presumptive or actual case of COVID, recipient certifies that it will not seek to collect from the patient out-of-pocket expenses. There is a separate tranche of the $100 billion that's being allocated to pay for uncompensated care. So providers are being obligated to abstain from balance billing. We suggest that you review your balance billing procedures. I think a question that has been raised today that is glaring is, because all patients are presumed COVID patients, does that mean that you can't balance bill any patient? And unfortunately, to date, we don't have anything to suggest that that wouldn't be the case. So it's important to just be very careful with your balance billing policies and make sure that your balance billing is not what gets you in trouble under these funds, because it is highlighted again and again as a concern for the administration through part of these bills, through part of the relief fund. Quickly touching on taxes, as far as we know, the provider relief funds are going to be considered taxable income, so just be mindful of. And with that, that gets us through our scheduled programming. We will take some time right now to answer questions. We've received a lot of them. I did want to point out we have a handful of resources for you. And again, these are all linked in the slides which we will provide, but Foley has a resource center that has a lot of very useful information. It will also include the slides and a link to this presentation. I'll include the link to the Provider Relief Fund website. As Anil said, we suggest you have somebody checking this regularly. Since we started talking about this presentation, which was less than a week ago to today, there has been 5 updates, so it's very important to stay up to date. Also, Foley Health has a healthcare law blog that will help keep you up to date on all these things, and we highly recommend that. I'm going to spend some time addressing some questions that we've received, but in the interim, I wanted to make sure you had our contact information. So with that, Lauren and Anil, I'll open up the floor if you want to start addressing some questions.
Sure. This is Anil. I mean, I've been answering them. I'm not sure, actually, if people can see my answers other than the person who sent them. So maybe it would help if I started reading some of the questions we got, and then we can answer them there.
Yeah, so we'll start going through a few questions for a minute. We'll also, any questions we don't address, we'll try to address via email after this presentation. And encourage you to reach out to your Foley attorneys for additional questions going forward. So one question we've asked, which, what if a provider is a pass-through entity and does not file a return? The FAQ that was released for Saturday or Sunday specifically addresses how to deal with that. You're going to have to, pass-through entities don't have to file separately. You'll file at the level, every entity that files taxes will have to submit its information, even if it's a if it's a large health system with multiple entities. At every point where you have to file taxes, that individual entity will have to report as well. We've also been asked to send out questions and answers. What we'll do is after this webinar, we'll compile the questions we've received, because we've received a number of them, and answer those that we can. Unfortunately, as we mentioned in the beginning, some of the questions don't have definitive answers. But we might go through a few more, just so we have a few more minutes, if we spot some that are of general applicability.
Yeah, a couple of the questions have been about if the slides will be available, and they will. They'll be posted on our healthcare blog. And I don't know, we'll talk to marketing and see if we can get a copy of them sent out to the people who are on this call as well, if that would be helpful. We've got a couple questions. One was about, question was, do you have to pursue FEMA funding before using these grant funds? I think the answer is no. There's no timing issue about what you have to do first. It's not like these HHS grants are like a payer of last resort, and you have to claim from FEMA and then show it wasn't available in order to get these funds. You just can't double claim. You can't claim a cost under your grant that is already reimbursed or obligated to be reimbursed. So I don't view the FEMA fund as there's no legal obligation for FEMA to pay you for any claim, particularly if you don't submit a claim to FEMA for that cost. You just need to make sure you don't submit a claim to FEMA at the same time you've claimed it under your HHS grants. That is a good question.
And to a certain extent, FEMA funds are funds of last resort. So FEMA will also make you account for everything that you've gotten paid for through other resources. So, and if you get, so you'll have to report these to FEMA when it comes down to what you can collect from FEMA. So you're not required to do one or the other.
And I see we've gotten a couple questions about how to define a rural provider. Alexis or Lauren, do you want to answer that one?
So the $10 billion for rural providers, all we know is that we expect that there'll be additional information this week, and we don't have a definition of rural providers yet.
We also had a couple questions on what advice we can provide regarding the inevitable audit that is going to likely come down the pipeline for COVID-19 relief funds. I think Anil touched on it, that having good documentation practices are going to be key. Alexis and Anil, anything else that we can offer at this time about preparing for audits?
Documentation is critical, and that includes the documentation I mentioned earlier about if you're having to make a judgment call about an area of risk under the terms and conditions, about what it might mean. That means documenting how you ended up interpreting it and why you think you comply. That's the sort of thing that can show that you didn't meet like the knowledge requirement and any allegation that your claim was false. And then I would set up work streams internally to coordinate to make sure you have a process to make sure that the costs you're being claimed are not being double claimed to other sources if you're also trying to claim from FEMA or other places. And I mean, that's it. We just don't know much about the reporting. So you want to make sure you document everything, pick your costs you're using carefully, or lost revenues carefully, and you'll have submitted the certification long before the report is due. So a lot of the work is done now, making sure you have a plan so you can submit that certification, and then in a few months or after every quarter, you'll have to gather your documents and report on the activities you've done and how much it cost and so forth.
Yep. We're also seeing questions from people who are trying to return funds that they don't think they're entitled to and haven't been able to successfully do it. I guess we would argue to try again as the as the portals get more use, they're fixing tweaks. But I would just document any attempt to return, whether that's letters to UHC who distributed the funds, or to your local Medicare administrator, your MAC, to send a letter saying that you're trying to return the funds. Make sure that it's papered correctly. I'm sure they will figure out a way to get the money back at some point, but you want to make sure that you have something documented before the 30 days are up, and otherwise it's a presumed attestation. Though I suspect anybody trying to return funds is going to be allowed to do so, even if they haven't fixed it yet, they will do at some point.
Yeah, we just got a question in from someone who's, I'm sorry, go ahead.
Yeah.
Go ahead.
Nope, you go ahead.
Okay. We just got a question in from someone who's wondering, there's the 2 rounds of the distribution. The $30 million that went out first was based on a very, very rough cut based only on Medicare revenue. And then for the additional $20 million, they've said they're trying to make it right so that they, right size the entire $50 billion for each provider. But that leads to the obvious question, what happens if the right size of the $50 billion is less than what you got under the first round, which is the case for some providers who have a high Medicare fee-for-service volume. And the answer is, will they have to, will they owe money back to HHS? And I've received that question from a few people now, and frankly, we haven't seen anything that suggests you will have to pay back funds. It's sort of a natural question, and one could, I understand the worry, and HHS has not squarely addressed this worry, but my view would be that the money they gave you the first round, you have terms and conditions, you've accepted the funds, and none of those funds made the payments conditional on anything else other than satisfying the terms and conditions. So I think that as a legal matter, they'd have a hard time recouping that money just because they changed their mind and want to do a different methodology later. So I would not voluntarily offer up to pay them back, but it would be great if HHS could clarify that the first round is the first round and the second round is the second round, and they're not truing things up.
Okay.
I'm also seeing questions about.
Go ahead.
Go ahead. No,
nope,
you wrap
keep going.
Up, or should we do? Okay.
One more.
I'm also seeing questions about governmental organizations that don't file tax forms. HHS has said everyone for the second round needs to submit their tax forms. I've also encountered this question with a few of my clients. It's not clear what to do. It's something where I think we should reach out to more guidance from HHS because right now they're saying everyone has to file their most recently filed federal tax return, which some entities just don't have because they're exempt. So it is an area of uncertainty we're aware of and are tracking, but don't really have a solution for.
Thanks, Anil. So with that, I'm going to wrap us up. As I said, you'll be receiving an email with a copy of the slides, with a link to the presentation should you want to listen to it again or share it with others in your organization. We'll also take some time to summarize some of the FAQs to the extent that we can, and hope to get that out in the next few days. We may not be able to answer everyone's question for a number of reasons, but we'll do our best. If you have additional questions that weren't answered today, please feel free to reach out to one of your Foley contacts or one of the three of us, and we'll do our best to assist you. We will also, as I said, try to stay on top of this information for folks, and we suggest that you try to follow either the Foley Healthcare Law blog or reach out to the Foley Coronavirus Resource Center for additional updates. Best of luck, everybody, and we hope this was helpful.